Yeah, I saw the clip of you guys talking about me yesterday. I love you, Pete. Don't worry. But no, I thought like a lot was made out of something that maybe I don't have that much conviction in. But I do think that the stock has been very much de-risked. It's not the same as being like, this is it, this is the bottom, throw everything you have at Netflix. But I want to point out a few things, Judge, that I think are important. The first is this stock was $700 in October, November. Yeah. So yeah, probably didn't belong there. Okay, that's fine. I didn't buy it there. Even at the time Ackman was buying it, January, he was buying a stock that had come down substantially from its high. And I know it doesn't matter where a stock has come from. I understand all of that. But it speaks to the valuation. In January, this stock was trading double the earnings multiple as Disney. And now they're on par. So I'm not suggesting Netflix should have a premium to Disney necessarily, but there are a lot of reasons that you can come up with why it would and why it has historically. And now you can basically buy the stock for 20 times earnings. $100 billion market cap on $30 billion in revenue. They dropped $5 billion in profit to the bottom line last year. Could have dropped a whole lot more, but they've insisted on big budgets, big production, and maybe to some extent now they're going to get some religion on the way they've been spending on programming, while at the same time going after some of the low-hanging fruit like monetizing sharing. So I'm not saying that Netflix is out of the woods or there's no problems buying it here at 220, 210, 240, whatever it is. But this stock has come down substantially already, and in my view, discounts the idea that it's not going to be a great period of time. I think like everybody gets that. So now the question is, well, how much risk are you really taking it here versus what happens when things start to go right again? So that's where I am with it. And if it gets under 200, I have the firepower to add to it. I don't know if I will, but I can.
You also made the point that you think, based on history, certainly in part, is that Reed Hastings, the CEO and management and the team will figure it out, that they have in every instance in the past. But I just wonder, Josh, and even Bill Ackman, who I spoke to today, tells me, look, they're a phenomenal management team, and they probably will figure it out, but I just can't wait around until they do that. It's just not my nature anymore, or the way that Pershing Square invests anymore. With a smaller, more concentrated portfolio, a wider dispersion of results could happen here. But what do you make of that?
Yeah, he's got a different investment time horizon than other investors. He's 2 and 20. He's on the clock. This is me. So I'm a buy. Like I can, if I decide, hey, they're going to get this thing on track, and it looks like the ad-supported tier will come out this fall, and that will be additive. And oh look, they have like all these new hit shows coming out, and the subscriber losses have abated. I could decide to stay with it. It doesn't necessarily have to perform or outperform in any 1 month, quarter, or even year. So it's hard to judge the motivations and incentives of other investors. So I'll just speak for myself and the statement that I gave you yesterday, which is that think back the history of this company. It's public like 20 years. First it was, oh no, they're going to cannibalize their own business with streaming. Big mistake. They have this thing with the DVDs going. It's working well. And then it was, oh no, they're going to develop their own content, or they're going to make big purchases like House of Cards, and they're going to spend too much money. All of these things that were initially panned by most most Wall Street analysts, almost every one of them, Wall Street was dead wrong. They did the exact right thing. Remember going international, how scary that was. I think that was the stock's biggest percentage loss in one day ever.
Right? I remember the price increases.
Yeah, they can't take price. Oh no, Disney Plus is coming. Oh no, this. Oh no, that. Listen, it's a tough business. It's Hollywood. It's media.
Yeah.
Go back and look at the history of Hollywood. It's competitive by nature. Everybody understands that. That's not the issue. The issue is at 20 times earnings, $100 billion valuation. They have 230 million subscribers. The next closest isn't even half the size. That's Disney. Okay? They have like an audience that cannot be replicated. And every time this stock is blown up, if you made the bet that they would eventually get things right, as a shareholder, you were rewarded. Not just a little bit, like richly, richly rewarded. The stock went up thousands of percentage points.
Right.
So I'm not saying they're out of the woods. I'm not saying there aren't issues. I get that. It was 700. It's 200. Relax.